Boom, we are live, ladies and gentlemen. Oh, bull market feels good, doesn't it? Just got back from a nice walk on the beach with the dogs for sunset. I'm feeling like my hair is probably too long, but that's okay. Hope you all are enjoying yourselves this evening. We're going to be going over Ethereum and Bitcoin, and I think we're actually going to maybe even do like a longer episode. So let's get comfy, see how we're all doing here. And we're just going to dive right in, see how long we can go. This is going to be one of those marathon trial nights, just to see what happens. Breakerage says, I was hoping you'd come online tonight. Stoked for this. Nice, boom. Hola desde Costa Rica. Gracias, amigo. Okay, yeah, so things are looking great in the market. It's always a good time in a bull market. I think it's one of the deceiving moments, though, is everything and everyone looks like a genius play. So we want to make sure we remember that a bear market eventually comes. Not here yet, so don't get worried. Look, light is still green, okay? So for those of you that are new to the channel, if the light's green, we're in a bull market. Now, if it all of a sudden turns red one day, you're like, oh no, then maybe freak out. Or even if it's off, okay, Tio, get yourself back on. Oh my God, guys, oh yeah, there we go. So we're in a bull market. That's the Tio indicator right there. We're green. Things are good. So we're going to dive in, and we're just going to take a look at Ethereum. Currently sitting at $1,911. Ethereum peaked right to the top of its buying climax trading range. Now on the 4-hour, we actually are showing body above that range too. Not much, but just a little bit. And there's actually something really valuable that's taking place. And I think Avalanche is a really nice way to show this right now. So I want to go in and take a look at Avalanche so I can share something with you guys. And Dominic, I see your message there. I got your email, just super hyper busy. Message Annie or Lindley in email info@arcanebear. Okay, so tonight's live stream marathon, I want to go over this kind of nice, beautiful little lesson here in Avalanche. So I'm zoomed in a little closer than I would generally like to be, but I want to go over something I think that's very valuable. All this supply here, notice the price spread here. Now look at the supply, higher, more of it, and less of a price spread, okay? So this is a really important point, and we go over this quite frequently. It's the idea of the laws of effort versus result that Wyckoff made such a great job of sharing. So here what we do is we measure the price spread from point A to point B, and we notice the volume signature or supply signature here down at the bottom. Now we have a slightly higher supply signature and an almost equivalent price spread. So if we measure that, 8% down versus 7, just over 8% down. The reason why this is so important is because this signals the end of this particular downtrend. Now there's a few other ways we can look at this too. Now if we scroll out, we can see number one, we are above a trend line here for Avalanche, very similar to what we did with Bitcoin as well. So with Bitcoin, when we broke above the previous, we could in some way, shape, or form, we could call this the creek. And then as soon as we closed above the creek, we broke above. There's a nice hard transition trend line here that we are following as well. And with Avalanche, we see that very strong correlative similarity here, where we saw a very large price. Sorry, my dogs I don't know what they're unhappy about right now, but we're going to ignore them for a minute. If they keep doing that, we'll let them inside. So this nice, basically downwards facing slope here, as soon as we broke above it, it kind of represents a change of the character and the jump across the creek quite often. So if we actually zoom in a little closer, the point of control will jump up to this area of around $37. There we go. So the point of control is this nice red line. And this shows us, at least in the visible range, the current area where the most buying and selling has taken place. So if we scroll out, obviously that's not the case. Look how high up we are for Avalanche. And this new trading range has been quite volatile. But it leads into two character things. Number one, here's our Avalanche tweet. We've been talking about Avalanche for quite some time. So this is from the tweet date to now. We're up 450%. That's great. From when we were talking about it in the private group, we're up almost 3,300%, 1,200% from the top of the box. So now that we're in this new trading range, it's going to give us a few key characteristics that we like to study. When we were just looking down on the 1 hour, this law of effort versus result is a great indicator to tell when trends are about to change, because down here, the supply was lower, caused a bigger price spread. Then here, a larger amount of supply coming into the market, causing an almost equal or just slightly lesser of a price spread to the downside. Now, there's something unique, is that this is actually happening on both directions right now. If we look at this supply indicator and the price spread to the upside versus this supply indicator down here and the new price spread to the upside, we can actually see that we are rising on diminished volume or on diminished supply. So the price spread, not done yet, but is likely going to be the first test of this new effort versus result. And all the big players are focusing on this because they want to know, can we move our money into this ecosystem and actually draw the price up to some degree? Now, I'm a firm believer that generally anywhere in the trading range is a pretty good spot, especially when you look out at the past and you think to yourself, oh my God, if I had bought Bitcoin at the all-time high of $20,000 back here, like, look how much room there was still to grow. It's just only through time that these things become more relevant. And it's very difficult to think to yourself, oh, I bought here, I screwed up. But what I generally like to do is actually, I'll start taking positions. So I'd entered Avalanche earlier, but I'll start to take positions in a trading range in very, very small amounts until I feel that I've got the bottom. That way I'm at least getting my trigger finger wet and willied, and that way I don't have to worry too much about finding a position just in case I was wrong. I do make small entries. Like if, say I've got 5 Bitcoin I want to buy, right? I'll buy like one here, I'll buy one here, try to buy one here, try to buy one here, and I'll try to buy one here. So it's like 1, 2, 3, 4, 5. Boom. There's the whole capital entry that you'd like to get into the market. And then you get a nice average of that trading range, right? Because effectively anything below 42 was 42 is perfect. Now I took my entries at 44 and I accumulated more the other day, and I actually added more to the pocketbook yesterday for Avalanche. I like what the tech team goes after. They're smarter than I am, so I just kind of follow their lead. But more importantly, if we zoom out and we take a look at some of the other plays we've been going over in the private group, GRT as well bounced off the bottom of its trading range and starting to see more strength here too. Aave off the bottom of the trading range, up with more strength, and rising price on diminishing volume supply signature too. Another key indicator that we really want to look for are these rising price diminishing supply signatures. So Avalanche is just one of the key ones that we focused on. For the private group there as well, for those of you that got the updates, which is all of you except for the people that joined within the last 2 to 3 days, but you can find that in the members resources area or in the Discord channel. What I want to go over is MTA as well. MTA is the M-stable idea. Do your own homework, do your own due diligence, but tech team told me about this one a while ago. It was a little slow. I took some of my first entries for MTA here, and I was going to double down today. I just missed it. So I'm basically back at my flat entry point for MTA. When you're playing with spot guys, you give yourself a lot of room to play, because MTA would literally have to go to 0 for me to not be in my position. And that's important to remember. I think that from the venture capital sector, I measure my success by, was it worth nothing or was it worth 100x more? I calculate in it being able to potentially go to nothing, so I just limit my bucket size anytime I'm making a venture capital play. So back to Avalanche here, because it is providing us this nice kind of learning opportunity, is again, the law of effort result right now is actually in both directions. Currently it was on the, or prior it was on the diminishing or the downtrend, limited supply, more supply coming in the market, equal but slightly less downtrend. Here it's the opposite. It's now in the upwards direction, where the supply indicator is actually less and you have rising price. And we're about to overcome that rising price's previous area of resistance, which is super important to keep an eye on. That once we start to really break out of this, and the similarities here between kind of Bitcoin's previous trading range, tried to get across. Once it jumped across that creek, closed just above the support line and took off. Now, none of these are going to be identical. This is like kind of like hunting an animal out in the wild. We are just looking for similarities here, and you can see we are in a trading range, broke above that current trading range. We're in our backup phase and looking ultimately very, very bullish for both Bitcoin and Ethereum. Now, I went over this in today's video earlier, so if you want to hear some of my conjecture around price predictions, go take a look at that. But for right now, I think what's valuable is just kind of constantly go over the same iterations, because we can find them in both Bitcoin and Ethereum. You have a rising price structure and a falling supply signature. Okay, well, what about Bitcoin? Bitcoin, exactly the same story. You have, oh, wrong button. There. You have a rising price structure here, and you actually have falling and diminishing supply. Now, it's a little bit counterintuitive here, but you generally actually want to cut off some of the peaks and notice that the general supply has actually been decreasing, even though we have some big spike moments. These are generally viewed as retail investors buying on the spot and open market. Here specifically was Elon Musk's tweet and the massive amount of supply that came into the market. And again, here the supply signature was the day that Tesla announced that they had bought Bitcoin back here at around 29,000, approximately exactly 10 days before the 10K filings are due. So that's a very, very important part. I see Moonboy says, why can't anyone tell me from Nuggets News is calling for the top of the market cycle right now? Probably because Nuggets News is feeling worried that they've made a bunch of profits and they don't know where the top is or why the top would come in or how to measure the top. So they're saying it's now. So let's make some conjecture and try to argue against myself. Generally on a top for a distribution level, you'd be seeing an enormous amount more supply come into the market, and you'd see a diminished volume uptick. So this is called a UTAD if this was a distribution, but it's not. Now, let's say we're wrong. Okay, well, maybe there's a potential we're wrong, right? And this is what would have to be the case. We would actually have to close below this support line and then below this secondary buying climax support, which is probably just not going to happen. The nominal price of Bitcoin right now in the future for what miners are producing it at should put us around $100,000 pretty easily. So thinking this is the market cycle top is just kind of someone who doesn't know how to do technical analysis. I like Nuggets News. I think he's great at covering topics and looking at new ideas, but the market conjecture is very difficult. It's very difficult to get it right. And unless you're looking at these very key characteristics of supply dynamics, which I see almost nobody do, you're going to get it wrong, because you could go, oh, this is a double top or some shit, right? Well, where? I don't see it in the supply signature at all. And that's the really important characteristic here, is the supply signature. If all of a sudden we had a massive gap up of supply and a very limited price spread upwards, then I would say, okay, that's a top. But we're not getting that at all. So I don't think that, I just look, again, I like Alex. I'm friends with Alex. I just wouldn't trust him personally to try to tell me when the market cycle's over. That's why I really don't listen to anybody else also as well. Just in case anyone knows, I don't listen to anyone else for where they think the price is going to go. I don't listen to anybody else for that. Not one iota. I like listening to CryptoLark because I love Lark. I like listening to Nicholas Merton from DataDash because I love DataDash. I've danced around fires with box mining, and I've chatted with Alex from Nuggets News. I consider these people my friends and my brethren. Do I think they're all great technical analysis? No. Do they provide high levels of content and constant updates about what's going on in so many different sectors? Yes, and I appreciate them for that. What we're doing here is very difficult, and it takes some serious time on deck, and I have seen very few people that have gotten good at it. And I'm not saying I'm good at it. I'm just trying to listen to the market. That's it. I don't think the bull market's done, but it's not because I think so. It's because the signatures and the supply that I'm reading right now tell me a different story. As soon as the market supply here tells me the story that this is done by an increase of spread, again, very similar to what we saw. Now we can go back here. Actually, this might be a good time to do a retrospective analysis of Bitcoin. And we've done this briefly with you guys before, but let's look for the character changes back in 2017, because they're quite noticeable. And it's one big moment. It's one big, giant kind of climactic moment in 2017, where all of a sudden we go from a bull market to the bull market is literally over in the blink of an eye. So I want to double down on that. Yeah, guys, so just, yeah, to make sure I'm clear about this, I love Nuggets News. I love what they provide. I'm just, my focus and specialty is this. That's what I go over every single day. This particular type of market conjecture. Where are we seeing distribution, or are we seeing a breakout pattern? Okay, so okay. Now, here. Let's make a conjecture too for argument's sake, right? Here we see rising price and falling supply. Okay, well that was actually indicative of a bull market up until the very last moment that it wasn't, right? But this moment here, this massive amount of supply that came in that invalidated here, that was game over, right? So today, if we have all of a sudden an invalidation, well, then we'll change my mind. But until then, I'm not going to try to front run what the market is doing when you have the world's largest companies adding it to their balance sheets. It doesn't make any sense to try to front run that idea, right? And look at and again, there's no supply coming out of the market right now, not at all. Now, again, if we go back to our Bitcoin perpetuals here, we look at our 4-hour chart. Yeah. So again, if in the next, let's say 48 hours, you saw a break below 41,000 and a close below there, boom. Okay, well, then we could say the market cycle's done. But until then, you want to lean into the indicator of the bias that we've taken this whole time. And this reaccumulation range was so sexy. You know, it's not showing any signs of losing strength yet. And there's no supply coming into the market here at all. And you would suspect that there would be big chunks of supply, much like we were just looking back in 2017, where it just went supply, 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 nothing but sell volume and huge spreads. The other way to look at this that we've been going over quite frequently is actually in our Glassnode charts. Dude, if you just keep spamming there, Jerome Washington, I'm just going to remove your ability to comment, because it's not friendly. Boom, bye-bye. Okay, so this is another great way to look at market supply coming in, and we're going to go to our favorites here on Glassnode, and we're going to take a look at our liquid supply change. Oh, why haven't they re-updated it yet? Oh well, we'll go to balance percent stacked. That's a good way to look at it. And we'll zoom out here to 2020 where we are. We'll actually zoom into that area just so it's highlighted. Okay, so right now what you can see is a continual decrease in the amount of supply in the open market. So before I blocked Jerome, he'd asked about, won't the institutions just dump on us again? Okay, well, I would see it. You would very clearly see that supply coming back onto the market, and that was very noticeable back in 2017, is the amount of supply actually started to drastically increase coming onto the open market all the way to the top of the bull market. Here we've been only decreasing. We have had less and less supply on a day-to-day basis on the open market. That's a big fucking indicator. We are nowhere near the top here. Now, if we start to change and we go up, right? So here, open supply actually started to sell in the market back when we were around like $1,000. All these guys are like, oh my God, yay, we're getting out at a positive. We've been decreasing every day since March 11th. I do not believe this bull market is over yet because it is all about supply coming onto the open market. It's kind of the thoughts about, well, what will institutions do? Well, you'd see that supply come into the open market. And look, very clearly, we're actually diminishing on a day-over-day basis. And if you look at the exchange balance stacked, this is another great way to do. Boom. We can see, boom, these nice big drops here. This was on December 24th. This is when the last big chunk came up. We went from 870,000 Bitcoin on just Coinbase alone down to 823, right? So it's around 50 or 60,000 Bitcoin that left Coinbase on Christmas. And now we're already down at approximately 700, 800,000. So we've lost 70,000 Bitcoin from the open market from Coinbase alone in the last month. That's open Bitcoin leaving the market, not coming onto it. And that's such an important factor to measure in here. How much Bitcoin is on the open market. In 2017, at the peak here, the supply started to come up with the bull run not go down. Here you're seeing the exact opposite indicator, which means that people are on long term in mass accumulating Bitcoin, putting it in their cold wallets and not touching it. It's very, very important to keep that in mind, that people started to do that back here people started to lock up in 2016. Yes, we had a diminishing supply up until what was this? Again, around $1,000 Bitcoin. Once Bitcoin hit $1,000, it started to come into the open market. I think once we get to $100,000 of Bitcoin, you're going to see this market cycle indicator for us turn around. But until I see more supply come onto the market, there's no way I'm going to think that the bull market is over. It's just totally counterintuitive. Yeah, so no, I disagree. Because of these particular ideas. Now, the miner net position is another great way to look at this, although they're usually covering costs. Here you can see miners have been selling less and less and less and less on a day-over-day basis since January as well. Now, these big chunks that came out in January, that was all supply pressure sell, right? That means if there's less that the miners have to sell, the price is going to even that much more easily move up and out of this range. If we look back even further, again, what we do see is that in 2017, they were massively selling here all the way up. They were getting rid of everything that they possibly could. And we've only seen one big spike like that come in. And they weren't selling anything back when we were at 9 grand, and they sold hardly nothing back at 17 grand. So that's important. There's a massive change in character because these mining companies likely realize they can play the market cycles too. So let's wait and be a bit more cautious with how they diminish. Although from what I can tell, they started selling pretty much on January 1st, which is likely for tax reasons, business reasons, to make sure that they can cover everything, etc. It just makes sense. Like as a business owner, you want to make sure you have cover for the next 3 to 5 years, or at least 3 to 6 months, right? Generally, I try to go 3 to 5 years is always a smart plan, because that way you can fail, start over, get back up, brush yourself off, and keep playing the game. Okay, let's see here. Take a look at a few more of your guys' thoughts. Yes, when supply keeps going down, it means we have a long ways to go because they're buying that up. I'm surprised that they didn't give it back to me. I hate that they do that. Let's take a look at this. I'll go back to all categories. We're still in Bitcoin. Let's look at where was it? Not miners, networks, ratios, supply. Yeah, let's look at some more of the supply characteristics. Hodled lost coins. Short term. Where was this? Liquid supply change, illiquid supply change. Here's another way to look at it. Little dicks, stupid Glassnode, little dicks with their data. I have to remember that. Well, anyways, guys, we should be able to see that supply change come into the open market. There's a few different ways to do it. Glassnode often will give me the opportunity to, but they want to charge me $800 a month just to see it. It's useless. I can just look at TradingView for much cheaper. We don't see that supply coming into the market. We see it leaving the market. And again, there's another way to do that here too. I think it's through. They're going to tell me that on all those features now. Dicks, such dicks. Glassnode, I like you guys, but you're dicks. It's not even worth looking at you anymore right now. Totally ineffective. Again, the big supply change is going to be measured. Will it happen quickly? Yes. Once we see a trading range start to break down, game over. That's it. Because then there's no more playing. Bear market sets in, and we pretty much get ready to sit in a bear market for the next 2 to 3 years. But I believe we're going to be at $100,000 Bitcoin by August. So that directly contradicts my general sentiment about the markets. So there's that. Without any supply change, just my general feeling. I don't know, whatever that's worth to you guys. I think it's important to keep that in mind, that I think we're about 7 3/8 14th through the way through the bull market. That newsletter comes out tomorrow, I promise. Check it out. Okay, so again with Ethereum here though, we are hitting we've wicked through. It would be nice to see a 4-hour close above our trading range here, but not getting that yet. I was kind of hoping we might get it as part of the video. And same with Avalanche, we're stubbing back up into this area. here. We want to close above 41, but these trading ranges just take time. I think when we were in this Bitcoin trading range, it was approximately 30 days for the whole cycle completion, 24 days before we broke across, and then we're 45 days in to get above that particular movement. Tio, did you pay for that? You mean Glassnode? Yeah, I pay for Glassnode, but they limit how much data you can use. And it's kind of silly. And then the only other bucket price they have is $800 a month. Would I recommend it? No. You can do much better without them. They've got some cool stuff, though. I wish they were better with giving their data away. I'm actually pretty upset with how little they give you when you sign up and pay for it. It's like, wow, I paid for it and that's all you give. Like, it's like 10 minutes. Are you kidding me? Dicks. Fuck you, Glassnode. That's how I feel about that. Great data, but very, very, way overpriced for what you get. TradingView is better. Even though I can't measure the liquid supply, I mean, we could probably get a tech team to build something like this to measure it, and it would cost $800. Assholes. Fine. I'll ask tech team to just build it then instead. So let's see, a few more thoughts and questions. Is the total chart a good way to track supply change? No, not necessarily. I try to focus on individuals, although I do like following baskets. If we do follow the basket in the DeFi sector specifically, there's just too much momentum here, personally. Yeah, Mary, you definitely shouldn't be trading. That's a big indicator that you're new to the markets. You shouldn't be like, it's your first like 5 years of learning how to play a musical instrument. You're like, I want to play in stadiums, and you're like, yeah, that's great and fucking all. I love your enthusiasm, but you definitely want to start off with baby steps, which is just learn how to buy and don't even fucking sell ever. Just learn how to buy for the next 5 years. You'll do great. Don't try to buy and sell and jump into stuff. That'd be crazy. Glasswalker says, I'm not affiliated with Glassnode at all. That's good. I'm glad, Glasswalker. I'd be giving you shit. I love Glasswalker. You're fantastic. Shout out to all the Kodiaks, by the way, and all the Bear family administrators and all the new people that have joined the den recently. Thank you, guys. You'll get an update from us again shortly. Arcane Bear, where have you been learning Wyckoff method? I like your interpretations of it. Well, I'm a big fan of psychedelic mushrooms. Maybe I'll start by saying that. But no, I read as many things as I can get my hands on. Did we go over Ethereum already? Yeah, we're right at the top of the trading range. We're looking for a nice clean close above that TR. Otherwise, we're still in the backup phase, and we could easily see a return to 1569. But we haven't yet. Oh, it's late. Get tired. Again, that's why we keep eyes on these trading ranges. Like if we look back at Ethereum, the previous trading range we were following here at around that $600 area. See, we could make conjecture that we see something like this, right? Breakout. And then notice how, I guess this is one of the interesting parts, is if for those of you that are studying, this would be a schematic 3, where phase C actually has its spring inside of the box. We've gone over this a few times in the private group, and we can take a really quick look at it now. These breaks above, where you actually get phase C that springs down into the creek, like right above the middle of the box. This is kind of what this looks like here. And we could make some type of conjecture that we're seeing something similar to, right? Here's the kind of rising, what some pattern traders would call a rising wedge. Like, oh my God, it's a rising wedge, and oh my God, it breaks down, and then boom, fires right out of there. So this is often, I think, a misinterpretation of a phase C. Very similar to what again, these are always different out in the wild. So here, phase C, the spring actually sinks down into just above the creek, or your moving averages basically, before taking off. So I think that's what we had witnessed here in Ethereum prior. which is, I think, also kind of what we're witnessing now. So there's always room for it to move to the downside of that new trading range that we're in, right, which is around 1569, and do something where you'd see a hit this, maybe even 1350, although I don't think it's going to do that. You could see these trading ranges develop, and this could be considered a phase C break above the box with a retest at the, again, this is one of the difficult parts, is these are fractal in nature too, so you can get a whoa, you can get a little bendy with the idea. So as long as we stay in this 1560 region here of this backup phase, I believe we're going to rip to like $2,600 still. Now, remind you guys, just for fun, I've been saying we're going to go to $2,600 specifically since we got to around this point, and more specifically this point. But we took our first longs in Ethereum way back here at 300. Those of you that are in the private den that joined us in August, you'll remember we watched this whole reaccumulation after decline, and I went, God, it's 404, 380. I took my long positions right here. I sadly closed out those. Those were great 10x long positions. They would have paid off absolutely monstrously. I got booked some nice profit here, but fuck, I should have just left them open. It's always the downside too, is being able to sit on a long enough to be patient for all that stuff. Adam M. Curry says, thanks for your videos. Well, thanks for the super chat, Adam M. Curry. I appreciate your support. How do you analyze something like BNB? The same way we analyze all of these things. Do your due diligence and do your homework, and you'll see exactly what we see, but that takes time. The arrow is boss. I know, right? It's so much fun. I'm glad I found this. Because now I can point stuff out. Before I was like, I would circle here, but it wouldn't make any sense. But now I'm like, whoa, there we go. I'm a big fan of the arrow. It's really helped lately. This part here and this part here have some similarities in them, do they not? This part here, could we see a break and then a retest? Maybe even to the bottom of this part of the trading range, 1350? Maybe. Could. We might even be able to say something similar about Bitcoin here too. Right? Just that fake out moment. Like, oh, it's a rising wedge. You see a quick breakdown just to scare the crap out of newbies. Hit into like 38,000. Oh my God, the bull market's over. And then go up to 100K. Again, the big guys are trying to scare you out of your positions. That's what they're trying to do. Huge institutional players are trying to scare you out of your positions. It's generally how this game works. It's again why we practice Wyckoff's trading methodology. He realized very clearly that the retail investor always gets the poop end of the stick, and you can mitigate that risk by knowing where you are on the markets, by using these types of trading ranges, and you can become significantly more successful by being able to address the market and where it's functioning at the moment today. Let's take a look at a few more of you guys' thoughts there. Directs our attention to your thoughts. Yeah, I think that look guys, this whole new feature here, this was really helpful. I'm glad we included this. This makes my mouse look more noticeable. So thanks. I'm glad you guys like this. We're getting better and better at it. Don't get screwed. Don't get screwed by the markets. Price target for polls? Nope. Price target for polls. Okay. Guys, if you spam the chat, I will ban you. Okay? Keep that in mind. So I'm not even going to answer you. Oh, good. See, Mike Comanche was already... Good job, Mike. Get in there as the moderator. Delete that guy's double spat cham. Boom. There you go. And Mr. Camberg, for spamming the channel, you've been put in a timeout like a little baby. We're probably never going to answer your question now either. How long should I hold Ethereum? Jesus Christ, that's a horrible question. I don't know. Here's a fun one, guys. For those of you that don't know, do this. Go, the best investors are dead. You're going to find something you really should like. The customer audit revealed that the best investors were either fucking dead or inactive. So how long should you hold Ethereum? You should probably just fucking keep accumulating, because you're probably a newbie trader and you're going to fail miserably at trying to get in and out of positions. So tell you what you do. You put on your big boy pants. You wait. I put on my, what did Christopher Walken say? He's like, I'm just like the rest of you guys. I put my pants on one leg at a time. The only difference is once my pants are on, gold records get made. So I'm just like you. I put my pants on one leg at a time. The only difference is I'm in a game of accumulation, and tell me about 70. I'm trying to accumulate as many assets as humanly possible. So keep that in mind. Judging by where you are, you probably want to probably just want to be patient and think about how good the dead investors did. People who switched their jobs and forgot about an old 401k, leaving their current options in place. Other people died and assets were frozen and, well, handled the states. Those were the best investors, people who didn't touch their portfolio. So often, maybe you shouldn't sell at all. You should just get better at producing more income, generating more wealth and more revenue through products and services, and helping other people identify where they are in their life in the marketplace. And you can literally just keep buying, because if you bought Bitcoin at $20,000 in 2017, you look like a fucking idiot in 2019. But if you just didn't sell it, you doubled your money today, and then you look like a genius again. So I definitely think that if you're new to investing, you should calm down and you should put in the due diligence and homework that it takes to actually get to that point. Do you use BlockFi to earn BTC interest? I personally do not, but I don't. That's not me suggesting against it. I like to move my capital into areas where I might be able to lose it, or make 100 times. One of the two. Definitely not getting 100x from BlockFi, but also definitely not losing $1,000 on BlockFi either. So I kind of like that game of, can I lose $1,000 or can I make 100,000 from that $1,000 that I didn't lose? Anyways, that's a different conjecture. This is literally why I love venture capital. Asymmetry in motion. Marco Kisa gives the number 100. Thanks for that one. Okay, guys. I think we're going to leave it at that. I appreciate you joining our live stream tonight. This is a nice hour-long chat. Again, let's keep a close eye on the market. I'll be here every day. I'll be here every day for the rest of the year. Currently, everything still looks good. A lot of volatility here in this current trading range, but not enough to worry me, especially because we saw huge news, and I think in the next month or two, you're going to see even bigger news. My current market cycle prediction has us around $100,000 for Bitcoin by August, which is just right around the corner. How old when you started trading? I actually tried to get my parents to buy into Google in like 2001, 2002, 2003. I was like 16 years old, and they wouldn't let me figure it out. My dad was like, nobody's going to buy shit on the internet, son. I'm like, Dad, no, trust me. Like, I swear. Dad looks at me and I was like, okay, well, you were right, motherfucker. I'm like, I know, I was trying to tell you I was right. So they own Bitcoin at least. Yay. At least we got there eventually. So I guess I started trading. What does your private group provide? You know, by asking questions like that, Rod, it's probably not for you. We're raising our price, by the way, guys, so we don't get as many questions like that. Trust me, value comes at a price. And for those of you that wait too long and want to ask me questions like, oh, what does it provide? Well, yeah, you might not get to find out. And that doesn't bother us. This is Teal with the Arcane Bear, ladies and gentlemen. Thank you all for joining us. I hope you had a great evening. Thank you. Yeah, I'm very, very deeply grateful that we get to do these live streams. It gives me something extremely entertaining to do, share my thoughts as I grow and as I learn, because I do not know everything, right? I like to discover what it is that's right at our doorstep, and we're often given the opportunity and potential to learn more. So I show up on a daily basis, trying to go through my learning process and sharing with you guys what it is that I see. I think that's a really, really important part. Someone asked, that's a valid question. Yeah, but it's not. It's not right now. If you think asking me what it comes with is a valid question, you've missed so much of what's out there. Go follow some Moon Hype Boys. Yeah, enjoy that. Steal with the Arcane Bear, ladies and gentlemen. Not even gonna try to sell you on it. Why? Because it's just that valuable. We don't need your business. See you guys in the next episode. Boom.